Pop Mart, the mastermind behind the blind box craze sweeping the world. Today, we're breaking down the company behind this frenzy and finding out if the stock's worth a buzz. Founded in 2010 by Wang Ning, Pop Mart is headquartered in Beijing, but its influence is global. It all started with blind box collectibles. Think Mania, Dimoo, and Labubu, but now includes plush toys, mega-size figures, accessories, and even building blocks. Revenue comes from everywhere: flagship stores, vending machines, e-commerce, IP licensing, exhibitions, and digital channels. Mainland China still leads sales at 61%, but overseas is catching up fast, and the brand is exploding in Southeast Asia, North America, and Europe. At the center of it all, Wang Ning. Pop Mart is a founder-led company. Born in 1987, Wang Ning, not just a CEO, he's the visionary who turned Pop Mart into a global brand. From incubating new IPs to signing top artists and pushing into global markets, Wang's leadership keeps Pop Mart fresh and culturally relevant. Revenue by products. In 2024, over half of Pop Mart's revenue, 6.9 billion renminbi, came from figure toys, the heart of its collectible empire. Plush toys pulled in 2.8 billion renminbi, mega figures 1.7 billion renminbi, and IP-related items 1.6 billion renminbi. This isn't just one-hit wonder territory. Pop Mart knows how to diversify and keep collectors hooked. In mainland China, Pop Mart ended 2024 with 401 retail stores, up 38 year-on-year. And Aroba shops? 2,300 vending machines across the country, up 110 from the previous year. Every corner you turn, there's a Pop Mart experience waiting. It's part of everyday life for fans. Globally, Pop Mart is spreading fast. 120 retail stores overseas, up 50 in just 1 year, plus 172 RoboShops in cities like London, Tokyo, New York, and Singapore. The collectible culture that started in China is now taking root worldwide. Market cap is 364.5 billion Hong Kong dollars. Share price is 271 Hong Kong dollars and 40 cents, with a wild range between 37.69 Hong Kong dollars and 293 Hong Kong dollars and 40 cents in the past year. ROA at 21.1%, ROE at 35.45%, and even a small dividend yield of 0.33%. This is a company that's not just growing. It's making serious money while doing it. 2024 revenue hit 13.04 billion yuan, a new high. The growth isn't slow and steady. It's rocket-fueled, powered by both domestic loyalty and overseas hype. Operating income? 4.19 billion yuan, with an incredible 32.13% margin. That's a sharp rebound from the 2022 slump. Proof Pop Mart knows how to scale without losing efficiency. Net profit in 2024 reached 3.13 billion yuan. That's a fat 24% margin. Pop Mart isn't just selling toys, it's printing profits. Total assets stand at 14.87 billion yuan, liabilities at 3.99 billion yuan. Debt-to-asset ratio is 26.8%, rising slightly, but still very healthy. The company's foundation is rock solid. In 2024, remuneration for Pop Mart's executive directors ranged from 1.36 million Hong Kong dollars to 7.56 million Hong Kong dollars. CEO Wang Ning earned 3.33 million Hong Kong dollars, while COO Moonduk Yi received 7.56 million Hong Kong dollars. Directors' interests in shares. Wang Ning remains the largest shareholder, holding 48.73% of the company's shares. The three largest directors' shareholdings decreased from 2023 to 2024. Now let's talk valuation. The stock trades at a P/E ratio of 106.1, very high, showing the market is expecting aggressive future growth. Earnings per share grew a massive 191.27%, highlighting strong operational momentum. The PEG ratio is 0.55, meaning earnings growth is actually outpacing the current valuation, which can be attractive for growth investors. The PB ratio stands at 31.34, extremely high, and a sign of strong market confidence in Pop Mart's brand and long-term potential. Q1 2025 was insane. Overall revenue jumped 165% to 170% year-on-year. Mainland China sales doubled. Overseas, up nearly 480%. Asia-Pacific grew over 345%, Europe over 600%, and the Americas almost 900%. This is what a global takeover looks like. Opportunities? Massive. The growth playbook is clear. Keep expanding globally, diversify into plush and mega figures, boost e-commerce, deepen community loyalty, and license IP into games, shows, and co-branded products. But it's not all sunshine. They're heavily reliant on top characters like Molly and Labubu. China's regulators are already looking at blind box sales. Rising competition from brands like Miniso's Top Toy is heating up. Pop Mart's global expansion faces tariffs and licensing challenges, especially in North America. And with today's valuation, there's little room for error. I like this company, strong balance sheet, fat margins, and massive growth potential. But at today's price, I'm staying on the sidelines. I'm a proud cheapskate, waiting for the right moment, which might never come, and I might never own Pop Mart. What's your move? Buy now or wait for a dip? Drop your thoughts below. If you enjoyed this breakdown, hit like, subscribe, and ring that bell so you don't miss the next one. Thanks for watching. I'll see you in the next video.